there's so many definitions of success, right? The reason I use success is because I knew that in order for me to become successful at trading, I needed to have that success mindset, right? And it's very important. And the reason I'm saying that is because many of us, or sometimes, will come into trading with the mentality and idea that we want to make money. Now, the truth is, I didn't come to trading not to make any money. That's just a lie. I came to make money, realistically, that's facts. But after a certain period of time, you have to come to that mentality and that realization that it's a mindset, just like success is a mindset. Just like if you're an athlete, in order to become successful as an athlete, Cristiano Ronaldo today, one of the best players in the world, he's not just a good and talented football player, no. He's a success-minded individual. That's why he's very good at his craft. And it's the same thing here with trading. John mentioned very well that in order to really succeed at this business, or even begin to start to educate yourself and see results, give yourself a minimum of 6 months of active learning and understanding through the platform. That's not being a part of the platform for 6 months. There's a difference. There's actively learning and really participating in trading for at least 6 months. They say the average person, it takes them between 6 to 18 months to really find their feet and start making a profit in trading, all right? So get yourself through the position where you're actively learning, not being passive, not just receiving trade ideas, not being just active on a group and receiving trade ideas, but no, actually being active with the education that we provide, all right? Again, John already mentioned that Rise Academy is basically crucial towards your success. In order for you to become successful at trading and at anything, you have to participate in this game, right? You want to make, 6 figures, 7 figures. In fact, right now in the chat, just type it really quickly in the chat. What is your goal? I want to understand what your goal is when it comes to trading. Is it you want to buy a house? Is it you want to buy a car? Is it you're saving up to pay your debts? Do you want to live a better quality life? Is there a specific amount of money that you want to earn before you can say, great, I've got this amount of money, and now I can go away and do whatever it is that I need to do, right? So I'm going to give you guys a moment to do that. There's about 60 of us on the chat. What is your goal? It can be something very, very simple, right? Financial freedom, which is great. What else? What else is your goal? 5 grand per month as an income. What else do we have in the chat? Financial freedom. Okay, great. So I so far I've seen 2 financial freedom, which is great. Shopping money. You want to trade just to have shopping money? That's great. Okay, so far I'll really highlight financial freedom. Okay, dream house, money working for me. My goal is that I want to be able to make money for my family and financially free. Great. So financial freedom has come up a few times, which is great, right? But now you need to begin to define what financial freedom looks like. Is it specific? Is it a SMART goal, right? Is it specific? Is there a time to it? Of course, you can never predict what the market will do, but is there a specific amount of money that you want to make? Are you working towards something? Maylee says, I need an LV bag. All right. So is there a specific goal? In order for you to really start to progress in Forex, you have to have a specific goal. Otherwise, I say this to every single person, whether you're brand new in Forex, brand new to this academy, and also have had some time in this academy, give yourself 6 months and you will quit trading. I'm just going to say it open and honest. The reason I'm saying that is because we really want every single person on this call to succeed when it comes to trading. Get to the point where you take the trade ideas and you're really seeing the trade ideas, but get to the point where you become independent and you can think for yourself, right? Successful people, they learn the skill and then they duplicate what they've learned. They prove that the educator is an educator. How do we know an educator is an educator? Because the student takes what they've learned and puts into practice what they've learned, right? One of the main rules of success is obedience or receiving instruction. Does that make sense? So success, a huge part of success is receiving instruction. If you can't take instructions, for instance, if you can't close a trade because you think the trade might continue upwards, but the educator tells you to close it, then in other words, you're not being obedient. That plays a huge role a couple of months down the line in your success. All right. So I just wanted to share that as an opener and as a mindset. I've been doing this for 13 months, on and off for the last couple of years, but I can definitely say that throughout this time in my year, I've had many, many experiences. I've made a lot of money. I've also lost a lot of money. But what I want to do today is kind of give you an overview of TradingView, right? The charts and basically the analysis, where we basically understand the market, how the educators see the market before they actually go ahead and send those ideas in the first place. All right, so just drop a number 1 in the chat really quickly if you can see my screen, and then we can continue. Hopefully you guys can see my screen. Okay, so far so good. Brilliant, brilliant, brilliant. And thank you for those goals. I've seen a lot of Louis V, a lot of materialistic things, which is honest. I'll tell you one of my goals. One of my goals at some point next year is I want to purchase a personal development leadership course. I don't know what it costs. There are many courses that cost between the 5,000 to 10,000 pounds, but that's one of my major goals because I really want to develop myself and grow into the person that I'm becoming according to my purpose. All right. And then of course, my other goal is to become financially free as well and, you know, live a better quality of life and also go on many vacations. But this is TradingView. All right. So TradingView, just like what John mentioned, is a charting software. Now, I'm going to ask a really quick question, right? Because we see, I think this question is going to be specifically for the newbies and people who've been in trading for anywhere from maybe a month to a couple of weeks. So you guys in particular, when you see this chart, does it make a little bit of sense at least, or is it still a little bit confusing? You can just really quickly drop it in the chat. Just put a number 1 in the chat if you get it or you get it somewhat, or number 2 if there's still room to understand. Let me know in the chat. Okay, so we've got 1, we've got 2. We also got a 1, 1, 1, 1, 1, 1. Okay, perfect. I've got another 2. Okay, we've got a 1. We've got a few 2s now. Perfect. Great. Awesome. So I'm going to explain. So what this chart basically is, it represents price history. That's it. Point blank. It just represents where price used to be. All right. Now, how do you turn this into an understanding? That's where I want to kind of break it down. So this is basically TradingView. We have different currency pairs. As you can see on the right-hand side, you've got different currency pairs. You've got XAE USD, which is gold. You've got Euro NZD, which basically stands for the Euro versus the New Zealand dollar. You can see that there's Australian dollar, Japanese yen, GBP, which is pound versus Japanese yen, and so on and so forth. These are the same currency pairs that you can see if you were to log on to your MT4. It's basically the same thing, right? But the reason we use TradingView is as a charting software so that we can basically see and have a better overall understanding of what the market is doing and where it's going. All right. Now, what are these candles? So you see red candles, you see green candles. What exactly is it? All right. It just simply represents people inside of the markets buying and people inside of the markets selling. So I'll give you an overall understanding. So in Forex, there's a statistic that says there's over 10 million traders around the world. It's probably way more than that. And it probably fluctuates, right? So there are many people around the world that are trading the financial markets, whether they're trading these currencies, whether they're trading gold, whether it be in cryptocurrency, whether it be in, indices or stocks or whatever the case is. But there are many different people who are trading around the world. Probably not 10 million at the same time, because that would be incredibly crazy, but there are basically a lot of people trading around the world exactly at the same time. Even right now, there's people trading. Now, why does the price of the market move? Why does it go up? Why does it go down? It's simply to do with many different factors, right? Supply and demand. It could be to do with, many people inside the markets buying and selling. In other words, the reason why the price will go down or the reason why the price will go up is really to do with perception of value. What does that mean? It means that if, I'm going to use one of your names, Eunice, for example, was on the chat. Struggling to hear you. Can you guys hear me? Okay.
Yeah, you're good. You're good, bro.
Okay, no problem. Let me just make sure. Yeah, so let's just say, right? Let's just say John was on. Thank you guys, by the way, appreciate it. Let's just say John was trading right now. John right now is trading the financial market, and John is saying that the price from this particular point to that particular point was already going down. So he thinks that the price will continue going down. So let's just say, for instance, right, let me just give you a scenario. All right, so let's just say right now, this is where the market is. And because the market is moving downwards, John is saying that I'm now going to place a trade that's going to go downwards. Why do you think he's doing that? Because he can see that the market is going down. Now, here's the thing. There are how many people around the world that trade Forex? Up to 10 million, maybe more. Probably way more than 10 million, especially in the last couple of years. But my point is, if John is thinking like that, how many other people are thinking exactly the same way? Probably a couple of other 100,000 of people are thinking, hey, the market is moving down, so I think I'm also going to sell. So now the more people that think that the market is going to go down, and if they sell, what does that do? It produces more volume in the market. So the market trends downwards, right? So it continues going downwards. So it's just really to do with perception of value. If many people are thinking the price is going to go down, or many people are thinking the price is going to go up, or many people are thinking if the price reaches this particular line right here, it will reverse and go in the opposite direction, which is up, then basically that's what will happen, because many people are thinking very, very similarly. Okay, so I just want to kind of open up your mind here. If you don't get this, there's going to be the recording anyway, so that you can understand this. But what basically happens, and the reason why the market goes up, one of the reasons is simply perception of value. You might think that the price should go down, and if you decide to sell, it goes down. You might think that the price should go up. If you decide to buy, the price will go up, right? And multiple people around the world who are trading are there to do exactly the same thing, right? Now, what are the other reasons why the market might go up and might go down? The banks, who are traders, big banks, the big players, right? These are people who are constantly influencing the market. If tomorrow, one of the big corporations like a Goldman Sachs, for instance, decided, hey, we want to change all of our payment systems to Bitcoin for a random reason, right? That's a big deal, because what they're basically saying is that they're devaluing the strength of the US currency. In other words, they don't really care about the US currency anymore. They want to transfer to Bitcoin. So what do you think will happen to the US currency? It will weaken. So what do you think happens in the people's minds? They're thinking, oh, okay, if the US dollar is going to be weak, I might take a trade like AUD USD, for example. And as you can see, AUD USD, obviously you got the USD, which is part of the currency. If the USD is getting weaker, obviously the market will go down. Drop a number 1 in the chat if that makes a bit of sense, or you guys are getting what I'm saying. It's basically to do with perception. That's what it basically means. So in other words, a lot of people ask the question of, okay, how guaranteed is my income in trading? Or how do I know when the market will go up? Or how do I know? Or can you please tell me? I know some people ask me, can you please tell me what's going to happen? But the answer to that, and even the best traders in the world, the answer to that is, I don't know. That's the answer. The answer to whatever your question is, oh, I don't know where the market is going to go, or where do you think the market is going to go? The perfect answer to that is, I don't know. That's the answer. Nobody knows. Nobody has a clue where the market will go. However, based on previous, history, previous price points, or wherever the price has been previously, you can kind of predict where the market could go. You can give yourself like an analysis of where the market could go. Based on your analysis, that's where you begin to develop a trade idea. All right. I hope I'm obviously making a little bit of sense. But in other words, this is a charting software. It basically gives you an understanding of, where the price is. Okay. Like I said, there's many different things that influence the market. 60 of us on this call might decide, okay, great, let's jump into a trade right now. But what will happen if we say we're going to buy? There's a lot of us going to buy. Maybe there's a couple million people doing the same thing. The market will go up because there's loads of volume and everyone will make profit. When the big banks get involved, they might decide we're going to do the opposite, right? So that's the first thing I wanted to cover. There's, sentimental analysis, which is thinking that the market will go up or go down. There's something else called fundamental analysis. Now, what is that? That's basically news. Just like the example that I gave you. If tomorrow, let's just say Brexit never existed, but we went through Brexit right now, that would affect the UK currency. It would affect the strength of the UK currency, right? And it would affect the euro as well. So essentially, we want to basically understand if it's going to be positive or negative. And how do you actually find out about the news? Well, we have something called Forex Factory. All right. This is something that will be covered a lot more in your training. Hence why John mentioned, please, 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 whatever you do, be active and not passive when it comes to your education. If you're not active, then I guarantee you might be here for a couple of years trading, or maybe a year trading, and you'll begin to think about the last 12 months and think, well, like, what have I actually learned in trading? And you'll probably regret it, right? And the reason I know all of this is because I made it a desire and a decision that I really want to learn this thing, because I know this is going to make me financially free one day. And that's the same mentality that every single person should have in a school, right? And then the last type of analysis. So bear in mind, please make sure you're writing down some notes when I'm saying this. So the first type of analysis I said was sentimental analysis, which is basically whatever direction most people think the market is going to go, whether it be up or down. The second type of analysis is fundamental analysis, which is like news. News always affects the market, right? And then the third type of analysis is technical analysis. Technical analysis is basically where most people start off. They want to understand, when the market goes here, should I buy? When the market goes here, should I sell? Right? Let me explain what I mean by doing that. Cool. So what I'm going to do is give you a scenario. Let's see. Okay, perfect. Let me just go back here. Okay. So let's see. So technical analysis is basically trading where you think the price will continue based on previous, something called price action. And one thing I'll do is this. Let me show you something. If you guys haven't watched this particular video, okay, this is if you go to Arise Academy on your Turbo, most people on here are going to be on Turbo and Flip, of course. The first video I want every single person to watch is this video, market structure. That's the first, and probably one of the most important videos that you should watch. All right. Whoever invited you to the call, whoever has introduced you to trading or whatever the case is, the first video you should go through is this video. And John has put it in the chat. Thank you, bro. Market structure. Watch this video. In fact, if you can, watch the first one, but I usually like to start with 1.2 because it basically explains what market structure is. All right. This one, and then the following video, which is 1.3, which talks about supply and demand. And those are the two videos I want you guys to watch. That's like your personal homework, I would say. Okay. And once you've watched that, go back to the person that invited you and really begin to say, hey, look, I get it, or hey, look, I don't get it. And then, of course, that's the reason why we have weekly trainings, of course, to understand further. All right. So moving back to the chart. Perfect. So now I'm going to explain to you market structure. So the first thing I tried to learn myself was something called support and resistance. What is support and resistance? Support and resistance is a floor and a ceiling. Basic. You've got a house, you have a floor because you're walking on the floor, right? And you also have a ceiling. I'm assuming that most people have a roof over their head, hopefully. That's basically what support and resistance is. It's a floor and a ceiling. I got very good at this in the beginning, and then I began to develop into other things. So if there's one thing you really want to remember, aside from other things, remember support and resistance. If you can take one major thing, one major key out of this call, support and resistance. What did I say, guys? Support and resistance. All right. So make sure you remember support and resistance. As I've said it 3 times, 4 times, support and resistance. Make sure you get good at understanding support and resistance when you leave this call. I want every single person to really take something out of this call, when they go away. And then, of course, when you can understand support and resistance, we'll basically move on to the next step. All right. Now, what is support and resistance? I've already mentioned it to you. A ceiling and a floor. That is it. So what is a ceiling and a floor? Let's just say, right, the price Perfect. Let me just, yeah, perfect example. I'm going to use this as an example right here. Okay, so let's just say this is where the market is right now. All right, we don't know where the market is going to go, but we can basically, let's just say the market was moving, right? The market was moving. Now, remember what a ceiling and a floor is. If you had no floor inside your house, what would happen? You would sink, you would fall through the floor, right? But the reason we have a floor is so that we can obviously walk and whatever the case is. It's the same thing with price. Price has a ceiling and has a floor. What do you think happened when the price reached the bottom? It acted like a floor, right? Look, right here, it landed on the floor, and instead of continuing, what did it do? It used it as a floor and the market reversed. Boom. Again, the market reached here, it didn't go through, it didn't continue, it used it as a floor. Now, of course, this is just a line to illustrate, but imagine this never existed. How would you know where the floor is or where the support is? How would you know? It's simple. All you need to do is find out where the candle has touched multiple times, and you can go ahead and place it right here. The reason I want you guys to go and take away support and resistance from this call is because you can go on your chart right now on MT4 or on TradingView and do this. It's so simple. All right. So you can see here that the price is moving. Every time it reaches this level, it's like a floor. There's like something blocking. It's a floor. Now, what happens when it reaches the top? There's a ceiling, a resistance. What happened again? Boom, a ceiling. It touched here, resistance. Now, why am I showing you this? Because let's just say for whatever reason, you decided, hey, when it gets to this particular point, I want to sell. Okay, great. You want to sell, great. So let's just say I want to sell and my take profit will be here. Did I get it correct? Absolutely. Let's just say at this point when the market was here, I wanted my target to be here because I knew that this is where the price is, but I knew that my target was here. If you guessed this trade or if you decided to jump in on this trade from here, you would have made profit. You would have made money from this point of the market to that point. Okay. Just drop a number 1 in the chat if that makes any sense, specifically for the new people. So for the new people, if you've been a part of Rise Academy for a month or less, type it in the chat if that makes any sense. Okay, brilliant so far. So this is specifically for the new people and those who are seeking to gain a better understanding of TradingView or just price in general. All right. So perfect. Just make sure you're working with me because I really want you guys to, I really want this to hit home. All right. So this is basically very simple. You can go ahead and start to do this by yourself. And you might decide, hey, if it reaches a ceiling, I'm going to sell. Or if it reaches a floor, I'm going to buy. Okay, perfect. Now, in Forex, where does market structure come in? Market structure is basically where sometimes a ceiling can become a floor and a floor can become a ceiling. What do I mean? I live in a flat, right? There's people above me and there's people beneath me. Do you think that they have a floor? Of course. The people that are above me, do you think that they have a ceiling? 100%. So my floor is other people's ceilings. So if I now go to down, because I live on the 9th floor, right? If I go downstairs to the 8th floor, what is my floor is no longer a floor. It's now the second person's ceiling. So look what happens. Let's just say the market was trending downwards. Right? The market is going downwards. If the market now reaches this particular point, I want to sell it. Why is that? because the price basically went through. But if it ever reaches back here, this is no longer a floor, right? It now becomes a new ceiling, right? It's not quite perfect, but let's just say the price, if the price went all the way up here, it continued downwards. That's essentially what's basically happened. Obviously, it's not perfect, but let's just say the price reached back up here and it continued. So if you can understand this as basics, you'll fly through the next topic and the next topic and understanding the next big thing. This is basically what I got very good at, understanding support and resistance, and then I understood market structure. So now I don't even need to use the lines. I could just eliminate the lines, but I can see if there's a support and there's a resistance. Hopefully this makes sense. So really quickly, guys, I'm not saying drop a number 1 in the chat just to waste your time or anything, but I really want you guys, especially the new people, to really work with me and see if you understand what I'm saying. So does this make any sense? Drop a number 1 in the chat if that makes any sense. Perfect. Thank you, Lorraine, Brenda, Ahmed. Okay, quite a few people. Thank you very much, guys. Well done. So this is basically what it is. And I can go on all day, every day. Again, can I find a new support and a new resistance? Absolutely. Where? I might decide that, hey, this is a good point of support. Whenever the price reached here, what happens? It bounced off. It got here, it bounced off. It went up here. It went down here, right? It broke through. Perfect example of what I explained just now. This was a support or a floor, but as soon as the price reached here, when it reached here, the very moment it reached this particular area right here, what happened? It continued downwards, right? Because what used to be a floor is now a new ceiling, right? Boom, there you go. It continues to drop. If you could really look at this and pay attention to what's happening on the market, you can easily make a lot of money if you get very good at understanding this. And then the market continues. Can you see other support and resistance? 100%. You could just decide, hey, I can see a support line over here, because whenever the market reaches here, it keeps on bouncing off as if there's an invisible line there. You can describe it whichever way you want. You can decide, I'm going to put a line here because I can see that the market keeps bouncing off of this line. You can do exactly what you want, right? And this is basically technical analysis. All right. Now, here's a tool that I use personally on TradingView to understand the overall like market and direction and stuff. I use something called a moving average. Okay. So what a moving average basically is the average of a certain amount of candles. And what it does is whenever the market is either above or below, I know that I should either be buying or I should either be selling. Okay, let me give you a good example. So right here, let's just use this particular area. So let's just say all the way up here, where the red circle is or the red box is. So look, this whole area is going upwards. But what if, let's just say the market was right here. We don't know where the market's going to go yet. But for what I can understand, that the price is above the lines. So I know that psychologically I'm thinking, okay, the only thing I'm looking to do is buy. That's it. My objective is to buy whatever trade idea, whatever outcome, whatever I'm thinking. The only thing I should be looking to do is buy. Why? Because the price is above the line. How much profit do you think you would have made? If somebody was buying in this situation, you would have been laughing your way to the bank. All right. Moving all the way up. Now, this might take some time. It might take a couple of hours, couple of days, depending on how patient you are. But you can see that the market just continues to go up and up and up, right? Moving average. Continues. And then once you can see that the market starts to move across these lines, you might be in for something called like a reversal, or where the price might just be reversing. At that point, stay away, just leave it. You don't even need to look at it. You don't even need to trade it. Or let's just say you're copying and pasting from the academy. You can take their copy and pasting, but you can also decide based on the market, I don't actually have to take their trade. I don't have to copy the trade. All right, I can just leave the trade alone. If I don't like the idea or the look of it, I can just leave it alone and I can wait for the next trade. If you've made your money in the market, if you made your £100 for the week or for the month, I don't need to trade ever again until the following week. That's where you begin to develop a discipline for yourself. All right. So those are the main two tools. So can anyone just type in the chat, apart from John, what I mentioned so far as a main takeaway? I know John can see me. As a main takeaway, the first thing I've already spoken about. Support and resistance. Thank you very much, Ahmed. Appreciate it. Support, resistance, support, resistance, support, resistance. Perfect. Now, do yourselves a favor. Don't do me a favor, but do yourselves a favor. Will you go ahead and practice it? Like, I genuinely mean it. Like, the reason I'm showing you this is because I'm telling you this is one of the things that I practice very, very often when I started trading about 13 months ago. Once I got a better understanding of it, I moved on to a full understanding of market structure and technical analysis. And then I moved on to understanding news. And then I moved on to other things as well. But do yourselves a massive favor. Go ahead. Number one, watch that video that I've mentioned. Number two, go on the chart and just mark out lines where you think support is, where you think resistance is, where you think support is, where you think resistance is. Now, if the market moves upwards like this, for instance, then even better. It's a good opportunity for you to see, okay, where's price movements? You might say, hey, the price is here. This was a ceiling, it was going up, and then it broke. And then now when it broke, this ceiling now became a floor, and then it continues upwards. You might go and put so many lines. You might even put 20 lines, right? But the point is, do it, because you're going to learn something. Does that make sense? So make sure you go ahead and you really begin to do that so you can get a better understanding. The reason that I'm sharing this with you is because, number one, this is what I did when I first began. Number two, because if you want to get to the point where you're making, because you guys said it, not me. It wasn't me that said it. You guys said financial freedom. You guys said LV. You guys said £5,000, £10,000, or £10,000. It wasn't me. It was you. It was you guys that said it, right? And I guarantee you that it's not going to be possible. None of you can do it unless you give yourselves the time to really investigate, right? Investigate, as in go into the academy, learn some of these basic things. These things, I can give this to a 12-year-old and they'll probably go ahead and do it. Somebody who loves games, right? Somebody who loves games and they'll probably be on their phone for a long time. If you told them, just draw lines on the chart, I guarantee you, give them a month, they'll probably start trading and make a lot of money because they went ahead and did it. So never become so busy or become so prideful that we can't actually learn some of the basics, because I guarantee this is what I did in order to understand a lot of the things I understand with trading. All right. So do yourselves a favor, go ahead on your smartphone, MetaTrader 4. It's basically the same thing. But I like TradingView because I can see a better aspect of things on my computer, on my monitor as well. Right. So obviously through time, I don't expect every single person to have the trader lifestyle and have like 10 different monitors and stuff like that. But through time, depending on your passion and your love for the trade, you might need a monitor because you might want to understand what price is doing from a better perspective, right? It's definitely an exciting time. And the reason I'm also sharing this with you is because we live in an age of technology. Things are very, very advanced. You can literally use TradingView to develop your own strategy over time, but it only happens when you understand what you're doing and what you're seeing on the chart. Right, I'm going to take the time to answer a few questions. I know some people answer some questions. It says, please, what indicators as a moving average are you using? What indicators and moving averages are you using? Okay, good question. So this is for Sarah, right? Sarah. Hey, Sarah, how are you? So it really just depends. I have many, well, I would say at least 3 solid strategies that I use for trading. It really just depends. So for instance, this is just moving averages. They have different numbers attached to it. And like I've just basically explained, you know, where if the market is above all of the 3 lines, I'm only looking to buy. I'm looking for a trending market to just buy. That's all I'm looking to do. I'm not looking to do anything else. I don't want to sell, because if I decide, hey, I think the market has gone too high now, I want to sell, then what will happen is you get caught out and you'll be upset and you'll lose money and you won't like it and you'll probably quit, or you won't quit, but you'll just be really, really vulnerable and upset, and you don't want that to happen. So you basically want to follow the trend pattern. The same thing applies if there's a downtrend or the market is going down. You can see here clearly, good example, it crossed. Okay, great. I'm now looking to sell. It's going to continue downwards and so on and so forth. So yeah, there are many different indicators. My advice is if you go to TradingView, it's actually a free platform, but it does have limitations. Like you can only have 3 indicators, but if you want more than that, then you can just go to the indicators. And there's basically thousands and thousands and tens of thousands of different strategies you can use. All right, but that comes with time. If you don't understand the basics, and even on the platform on Arise Academy, then you'll basically be lost in the sauce, and we don't want that. All right, what the other questions? The other questions is, how do you know when you can have an exit? So how do you know when you can have an exit? Would you know or not, apart from, sorry. So can you please respond, Khan? Hope you're well. Can you please respond in the chat if you mean when should you actually enter and when should you exit a trade? Is that what you mean? Let me know in the chat. I'll come back to you as well in the meantime, so that you have time to type in. But another question also is, okay, so Michaela said buy on the floor and sell on the ceiling. Perfect. Very simple, but makes a lot of sense. Exactly. So if something is on the floor, what do? You pick it up. If something's on the ceiling or stuck to the ceiling, you take it off. So you buy on the floor, you sell on the ceiling. Very simple. Khan actually responded, says, as in like, how long would you follow the trade? This is where you have to have a set target. So a perfect scenario of this is the trades. So when it comes to the trades on Flip, when they send out the trade ideas, have you noticed that they have 3 take profits? They have take profit 1, 2, and 3. They have a set target in mind before they send the trade idea. So they know that if the market reaches X, it will close the trade automatically. I don't need to be waiting, sitting like a sitting duck and waiting for the market to reach 1,000 pips. Nobody does that unless you're a super long-term trader. Nobody, not every single person is patient like that. But what you want to do is, if you're somebody who's brand new and you want to develop a strategy and you want to gain, like, I don't know, 10 pips, right? You can, as soon as you reach 10 pips, you're done. You don't need to go for 1,000 pips. That's that. You just be there all day, every day. All right. So if you don't know what pips is, I know John said I should cover 1 or 2 other things as well, but this is a quick illustration of pips. If you were writing down or taking some notes, I just like to obviously show it so everyone can see. Perfect. Hope it helps. So yeah, this is just an example of pips, and I use the number 1 because 1 is very easy to explain, but it could be a number 2, can be a 5, whatever the case is. But basically we have a standard lot, which is 1.0, which basically equals to 10 pounds or $10, whichever. 0.1 equals to 1, and then 0.01 equals to 10 cents. All right. So there's different lot sizes that we basically trade in the market. On your MetaTrader 4 app, the first thing you'll see is like a decimal point. You'll see 0.01 or whatever the case is. Make sure you change it. If the price moves up by, let's just say, 10 pips, and you use a 1.0, then if you did the maths, you just need to times, so $10 or £10 times by 10 pips will equal £100. You'll make £100 from a very, very small move, right? But I'm guessing that not every single person on this call has a 1,000 or maybe a couple of 100,000 or maybe couple thousands of pounds in their trading account. So in other words, you shouldn't be using 1.0 because it's very, very dangerous for your account. It can basically screw up your account. And I'm telling you because I've been there a few times. So if you have an account, which is, let's just say between 1,000 to 500 or maybe less than 500, ideally you shouldn't be using a lot size bigger than 0.01 or between 0.01 or maybe 0.04. So between 10 pence or 40 pence, you shouldn't be using any bigger than that, right? And the reason for that is because you don't want to overexpose your account. What do I mean by that? Let's just say I want you guys to do the math with me, by the way. So let's just say I have a $500 account or a £500 account, right? So I have a £500 account, and then I decided to use 0.01. Sorry, 0.10, which is £1. Let's just say we want the market to go up, but instead of the market to go up, it goes down, right? So let's just say we want the market to go up, and when the market goes up, it's going to go up by 30 pips, right? Let's just say it's 30 pips. So we want the market to go up by 30 pips. So between here to here is 30 pips. When it reaches 30 pips, we'll be in profit, right? If I used a 0.10, which is £1, how much money would you make? £30, right? From here to here, you would make £30 if the market moves up and you decided to buy. But what if you want the market to go up and you wanted to buy, but it goes in the opposite direction? And your stop loss is, let's just say 50 pips. You will lose how much money? You'll lose £50. Now, from a £500 account, losing £50 is a big deal. That's a lot of money. That's, I think, more than 10, that's 10% of your whole account that you've lost in one trade. Now, when it comes to trading, how many positions do we send? About 3 positions. So let's just say you did 0.01 3 times. If you do the maths, you would lose £150. You have a £500 account and you lose £150. Type of number 1 in the chat if you want to lose that type of money, or type of number 2 if you don't want to lose that type of money. Exactly. Every single person here guaranteed to put 2, unless you're a super high risk taker. Does that make sense? So my point is, you need to have proper risk management here. This is obviously one of the main topics of the call. Proper risk management is developed over time in terms of a mindset, but as a practice, it should be handled immediately. When you start trading, start to practice this from now, because I promise you the habits will catch up to you. Even if you're somebody who hasn't invested real money and you're still on the demo, just to begin with, have a proper habit of using the proper lot sizes, because I guarantee you, when you're doing 1.0 on like £10,000 account, and then you're like, okay, great, I've just got my £1,000, I'm ready to start trading properly and make this money. Something in you will say, I've done it before, I've made a bit of money, let me just guess it and put 1.0. Something in you will tell you that, I've been there. And that something in you will be like, what's the worst that can happen? If I lose, I lose. But the moment you lose a couple £100, you will be so devastated. Nobody likes to lose money, especially if you're brand new and you've invested money for the very first time. All right. So in other words, if you have a £1,000 account or maybe less, start practicing using these type of lot sizes: 0.01, 0.02, 0.03, 0.05 at max, right? And you want to do that obviously a few times. But remember that the more trades that you place, have the idea that it's always called R to R, which is risk to reward. Risk to reward. What it means is it's always risk before reward. When you started trading, you signed up because you want to make a lot of money, right? But remember, trading is an investment. We're going to basically show you how to trade, how to make money. We have an amazing lineup of educators who are experienced. They've been in a position where they've lost money so that you don't have to. So basically follow their steps and follow their way. But also remember that it is the financial market. So you always have to have at the back of your mind, it's risk. How much am I willing to lose in order to potentially gain? That's the mindset you have to adopt. So if you're not potentially looking to lose £50 out of a £500 account, then don't place that lot size. There's no point. If you're not ready to lose, let's just say you have a 50 pip stop loss and you're not ready to lose like £150, don't place that trade, or don't place that stop loss. Minimize it, go to 0.01, because you know that 0.01, if I was to ever lose that trade, instead of losing £50, I'll probably lose £5. If you're happy with losing £5 from £500, you can drop a one in the chat as well. I'd rather lose £5 than lose £50. I'd rather lose £5 than lose £500 of my entire account. All right. So there's many things that we covered today, but I want to really leave it for questions. But my point is, the main thing that you want to take away from this call is, number one, support and resistance. Support, resistance, support, resistance, support, resistance. And go on your chart. If you have to do a zigzag, a random zigzag on a shit, guys, I'll be honest with you. I want every single person here to be successful, or more than 50 people on the call, right? The reason I'm sharing this with you is because I've been through a journey. I'm still on the journey now towards success, right? I will actually let you guys know, and we'll all celebrate together when I reach £10,000 in a single month, right? That will be a great day. But the reason I'm sharing that with you and that goal with you is because I want every single person to get to that particular point where they can celebrate and say, wow, I've made £500. I made £1,000 this month. I've reached the £3,000 mark in my trading month. I can't wait to make another £3,000. I want to celebrate with you guys, but it won't happen if you don't do the basics. I can guarantee you. And the basics really starts off with support and resistance. Literally, sheet of paper, write a line, write zigzags, write zigzag, zigzag, zig. In fact, those of you who have kids, right? If you have kids or young ones in the house, just get them to scribble. Just get them to scribble on a sheet of paper. And once they finish the scribble, then you can be like, all right, great. Based on this scribble, where's support? Where's resistance? I guarantee it will change your life. If you do that, you'll start to see things in a different perspective. And then when we come back to a call, we can go through the different parts. But I guarantee you, by the time you watch the video on market structure anyway, what I'm basically saying to you makes a lot of sense. It will make so much more sense over time. All right. So support, resistance. 2, risk management. Have a proper mindset and a proper risk management. Have your mindset as compounding. Something that one of our educators said, his name is Clifford. One of the things he said was, when it comes to trading, think of it like this. We have the big players. We have the big human beings that are eating on the dinner table. And then we have the mice. Now, what do mice do? Mice actually collect the crumbs. They don't actually eat real food or big food. They collect the crumbs or the dust that kind of drops on the table. That's kind of like how we are. We're not looking to make big money every single trade. That's not how it works. We're looking to compound, collect as many crumbs as possible to compound. That's where the compound effect comes in. You want to collect as many small profits, as many small wins as possible, as many small wins. Now, if you have a bigger risk for appetite for risk, then hey, that's great. That's on you. I know there's a few people on the call that have great appetite for risk, which is great, right? But have that mindset and that mentality to compound. £5, okay, £2, £5, £2, £3. They all add up. They will all add up. £2, I made £1. Oh, great. Show your success. Like, show your success. Like, if it's £5, oh, hey, mom, I made £5. Or hey, husband, or hey, wife, I made £5. Or hey, son, look, I just made £10. Celebrate it, because this is compounding. It makes a big difference over time. Compounding. Just like when you go to the gym, you don't spend 3 hours in the gym. You spend maybe 30 minutes to an hour in the gym every day consistently. It's the same thing with trading. Collect those small profits. But remember that in order to do that, it's always risk before reward. Always go in with the mindset that if I lose the trade, I might lose £5. If you're saying if I go into the trade, I might lose £50 and it's too high for you, then you already know that, hey, I'm using a bit too big lot sizes, or maybe I have too many positions open. There's way too many trades that I have open. Maybe I need to start closing some trades. All right. So last but not least, I'll really quickly show you how to partially close a trade. I'm just going to connect my phone. If you can make this phone co-host, please, John. I think there was a few other questions as well. Hopefully I didn't miss anyone. Yeah, got that one. Got that one. Ceiling. Yeah, I think this is most, yeah, those are the main two questions. Okay. My phone needs to be host. Let me see if I can find it. But guys, in the meantime, do you guys have any questions before we wrap up? We're gonna close shortly, but if you have any questions, feel free to just type it in the chat. Let's see. I have willisoromi@gmail.com on the call. If you can find it, you can make that co-host and then I can share my phone. There we go. Okay, perfect. So I'm sure John's done a great job when it comes to, don't watch the account, guys, some reds. But yeah, that's just how the game goes sometimes. But in terms of partially closing, all right. So this is some of the trades that were sent by our indices educator so far. But how do you partially close a trade? Let's just say I've taken a trade right now for Euro USD, for example. Let's just say Euro USD is going to be 0.1. And I said it's going to be a buy. All right. Cool. Perfect. Just ignore these other trades because these are currently running trades from earlier today. But how do you partially close? Let's just say you want to close a position. If they say partially close your position, this is what they mean. They basically mean you swipe right. And when you swipe right, you act as if you're going to close the trade. So you press the tick. And then, of course, it will show you the losses and the profits and whatnot. But another thing it will basically allow you to do is change the lot size. So can you see that the lot size is £1? Because remember, 0.10 is £1 or $1, whatever the case is. So what you can do is basically close part of it. Okay, what do I mean? So let's just say right now, I'm in a loss of nearly £5. I might decide that I still want to let this trade run. I want to let part of the trade run, but I can close part of the trade as well. So let's just say I wanted to close 0.05. Perfect. Can you see that? So the numbers changed. So instead of saying minus £5, it says minus £2 instead. So if I do that, I will close it. But guess what? I still have the other half of the trade still running at the bottom. Hopefully that makes sense. I basically closed half of my trade. So again, I can try that again. I can even show you another example. I can say, okay, I want to close out of this. I want to close maybe, I don't know, 1% of this trade. I can close it and then the other half or the rest of the trade will still be running. So whenever we say partially close, that's what it basically means. All right. If we say partially close, that's what it means. It says, can you repeat, please? Perfect. So I'll give you another example. By the way, I think what I'll do is I can show you on here as well. This is one of my demo accounts, by the way. But let's just say I wanted to close, right? They say, hey guys, partially close your positions, or hey guys, we're already in profit. Feel free to partially close. This is what they mean. They just mean swipe right, or you can just press and hold. It's really up to you. You can press and hold. You press close, and then change the number of the lot size to obviously something a lot less, which is going to be like, I don't know, 0.5. And it will just basically close part of your trade and leave the rest running. Serge, specifically for you, does that make sense? Just type it in the chat. Okay, perfect. So bear in mind, if they say partially closed, that's what it means. It means, okay, great. I want to partially close my trade. I still want to be in this trade, but I don't want to have as much money in the market anymore. So I'm going to partially close it. You can do this even in minus. You can do this in profit as well. It really is entirely up to you. All right. So this is basically it. This is the training. Lorraine, hey, it says, if your lot sizes is already 0.01, can you partially close? John's just answered the question. Yeah, that's right. You can't partially close because obviously that's the minimum. That's like the smallest type of trade that you can take. The minimum is 10 pence per pip, exactly. These are indices, by the way. So you can see it says FTSE 100, France 40. So the lot sizes are quite huge, but it's quite different. Again, you'll learn that a lot more when it comes to your academy. But on normal currency pairs, if you don't have a sizable account, you shouldn't really be trading these. This is just one of my demo accounts, as you can see here, just letting you know. But yeah, this is basically it, guys. Do you guys have any other particular questions? And just drop a number 1 in the chat if you guys got some value from here. I want to make sure that every single person got something that they can really go ahead and take away and begin their trading journey. We want to get back to the point where give yourselves even 6 months from having many, many conversations. All right, question from Rashad. Can you increase your lot size? No, you can't increase your lot size from a running trade, right? You can modify it. And modifying means, let's just say they say, okay, we're going to increase the target from 4 to target number 7. Then obviously you can change the number and increase it to obviously whatever the number is or how far ahead the number is, depending on if you're doing the trade or if the educator decides to tell you we need to increase the number. And you can change the stop loss as well. All right. So you can modify the trade, but you cannot modify the lot size. Very important to understand that. Hope that helps, Rashad. Perfect. Thank you, Nicole. Support resistance. So if there's something that you want to remove or take away from this trade, please remember it's to do with support resistance, have proper risk management. And of course, on the next call, we're going to basically resume. We want this to be a culture, a family, and also, a place where many, many people can win. We want every single person to win in trading, because trading is a skill. It's a mindset. If you put on the mindset of success, you're going to do everything you can to learn this skill. All right. So with that being said, guys, if you don't have any questions, I really want to hand it back to John. Well, in fact, if John wants to close, if he has anything else to say, or if you want me to close, I don't mind.